My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot. If you want to read more about what John writes on a regular basis, you could head directly to incomeinvestors.com. You can find the link to the website in the description below. Bay Street in Toronto, Canada's financial center, is just about an hour flight away from the Wall Street. But the contrast between American and Canadian banks is striking. Here are some stats that may impress you. Since 1967, the Canadian Deposit Insurance, or CDIC, an organization providing deposit insurance to Canadians, has had to deal with just 43 situations where depositors needed to be saved from failing financial institutions. In contrast, since 2000, the U.S. Federal Deposit Insurance Corporation, or FDIC, there have been 560 bank failures where the depositors needed to be saved.
And during the financial crisis of 2008-2009, the U.S. experienced major bank failures, bailouts, and the worst economic contraction since the 1930s. Now, in Canada, there weren't any major bank failures, and the economy experienced only a mild recession.
And I say let's go back a little further. For more than a century, the Canadian banking system has proven to be more stable than its American counterparts. And one may ask, why is that? And it's actually very simple. Canadian banks are very conservative in nature, and they're highly regulated. And that's why you don't see them taking extreme risks. And despite their conservative nature, Canadian banks reward long-term shareholders with a hefty dividend and a strong track record of rising payouts for decades at a time. One Canadian banking stock with the presence in the US investors should put on their radar is the Bank of Nova Scotia, traded on New York Stock Exchange under symbol BNS.
Headquartered in Toronto, Ontario, Canada, the Bank of Nova Scotia is more commonly known as Scotiabank. It offers banking solutions and services not just in Canada, but it has a big presence in the US, Mexico, Peru, Chile, Colombia, and the Caribbean, and Central America, and other international countries. Scotiabank actually operates through several business segments, as most banks do, namely Canadian banking, international banking, global wealth management, and global banking and markets. Its offerings include, but are not limited to, what you'd expect a bank to do, and that's banking products, checking and savings account, investments, mortgages, loans, insurance, auto financing. And for small and medium-sized and large businesses, Scotiabank offers lending, deposits, cash management, and trade financial solutions. It also offers, on the individual side, wealth management advice and solutions, including online brokerage, private banking, mutual funds, exchange-traded funds, things like that.
And what kind of dividend does a conservative financial institution like Scotiabank have?
Scotiabank treats its investors really well. It's actually been paying a dividend since 1833. That's a track record of close to 200 years, and that's basically a rare thing to find outside of Canadian banks. Now, between fiscal 2013 and 2023, those who own BNS Stock saw their dividend payouts grow at a pretty solid compound annual growth rate of 6%. Most recently, in November, Scotiabank declared a dividend of $1.06 per share, or $3.18 per share on an annual basis, for a pretty high banking yield of 6.85%. Despite the recent increase in provisional credit losses and pessimism toward Canadian banks from investors, Scotiabank has made it clear that dividends are an important part of returning value to shareholders.
And what's happening with BNS stock?
Scotiabank stock is facing headwinds right now, down roughly 4.5% year to date and 6.2% year over year. But it could be an opportunity in the making. In fact, it's quite possible people in a few quarters could be looking back, wondering why Bank of Nova Scotia stock was trading for such a low price. A little background first. Over the past decade or so, debt in Canadian economy skyrocketed. The increase in debt was on the back of the red-hot housing market and consumers and businesses just taking on more debt because rates were artificially low for a very long time. Now, fast forward to 2022, 2023, as the Federal Bank Reserve here in the US was raising rates to curb inflation, the Bank of Canada was doing the exact same thing up there. As rates increased, the housing market in Canada came to a grinding halt, prompting investors to question what will happen to balance sheets at Canadian banks.
If Canadians can't afford to pay, their mortgages, credit cards, and loans, won't the bank need to write off loans?
Well, that's what some investors think. Panic was seen in Scotiabank stock. In early 2022, BNS stock traded as high as $66 per share. At the time of this recording, it trades roughly 30% below those highs. Here's the thing, though. Scotiabank remains fundamentally strong. It has certainly increased the amount of bad debt, and on a bank's balance sheet, it's reported as provisional for credit losses, or PCL. but it's still fractional to the overall loans book. It's well capitalized and well managed overall. For some perspective, at the end of its fiscal year 2023, which actually ended on October 31st, PCL was, and this is in Canadian dollars, 3.42 billion. Total loans at the end of the first year were 750.91 billion, and total assets at the bank were 1.41 trillion. Now let's do some basic math or simple math and put that into perspective. Scotiabank's PCL amount is about 0.455% of all loans and 0.24% of all assets, which is minuscule.
John, thank you so much for your insights. Just to recap, Scotiabank is a major Canadian bank that's fundamentally strong and well capitalized. When it comes to Scotiabank's dividend, it's a rarefied company, having paid out dividends since 1833. The US was only 57 years old at that time, and Canada was still 34 years away from being a country. Over the past few quarters, the Canadian banking sector as a whole has faced some bearish pressures. While BNS Stock may be down, but it's certainly not out. The long-term outlook for this Canadian bank is rosy, with Wall Street analysts expecting BNS Stock to generate high double digits return over the next 12 months. BNS Stock is shaping up to be a perfect stock for both immense capital appreciation and solid income growth. That's it for today, and make sure to go to incomeinvestors.com now to get our free special reports on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more videos soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.